Meeting, to this very important meeting where we are focusing on financial accounting examination techniques for the upcoming ZICA June 2025 examinations, and this is relevant to DA1 and also CA 1.1. So your presence here today is a statement that you are very committed to ensuring that you pass these examinations and also ensure that you master the discipline of financial accounting, which really is the backbone of an accountant. So as you have already come to appreciate, now, financial accounting is far more than just debits and credits. It's the language that businesses use to communicate their financial health to the world. So it's very important that we ensure that your knowledge, passion, and dedication translate to examination success in this particular subject area. We do appreciate the ZICA exams are very vigorous. Now they are designed to ensure that we test your not only your technical understanding, but your ability to apply knowledge in a structured way and in a very time constrained manner, because these are the conditions that you tackle in the business world. So beyond these techniques, we want to prepare you for discipline, for preparation, and to have the right mindset. So no one walks into a ZICA exam with all the answers. We know that. But what we are saying is that those who pass are the ones who prepare with purpose and believing in their ability. We have prepared not only this examination techniques session, we also have the videos available for you online. And we also have the examiner's reports, which our examiners prepare after each session. We urge you to pay particular attention. If you have any questions, please ask Madam Kangwa. That is why she's there with you today. And we wish you all the best for the June 2025 session. And we hope that you will come out victorious. Please read, study, 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 because we want to ensure that you pass. Thank you so much.
Thank you, Director. Mrs. Kangwa, over to you.
Okay, it's done. Good afternoon, everyone here. First of all, I would like to say I'm so grateful to ZICA for this opportunity to give the CA 1.1 and DA1 the examinations techniques. as they prepare for their June exam. My name is Velena Sizulu Kangwa. I'm the lecturer at ZICAS and also a consultant at ZICA, and that is why we are here together this afternoon. My main task this afternoon is to actually help the financial accounting students to actually prepare for the upcoming exam. And we will talk about a number of issues that have been issues of concern over the past years, so that even as we prepare for this exam, we do not make the same mistakes that other people before us have made. And so I would like to ask each one of us to pay particular attention to these important issues that we are about to talk about. My mandate is actually derived from what has appeared as contentious issues as far as these exams are concerned, where the examiners, the marking team have actually recorded over the past years that these matters have really been an issue for the financial accounting students. And so this is the content issues of double entry, errors that affect the balancing of the trial balance, and the statement of cash flows preparation seems to have been an issue for the past few sittings now. Adjustments in financial accounting, we talk about accruals, prepayments, inventory, irrecoverable debts, allowances for receivables, and depreciation. Also, the preparation of the journal seems to be an issue over the years by a lot of candidates. Then we shall talk about other general issues besides these technical matters, issues to do with time management, what you need to do generally for you to be ready for the ZICA exam. So we will start with the technical aspect of the exam, and then later we shall move on to the general matters that you need to be very much aware of. So the main objective of exam technique session is actually to help students preparing for CA1.1 and DA1 financial accounting understand the very important elements of the subject so that their chances of passing the exam can be increased. And we go straight into talking about issues to do with double entry bookkeeping, which over the years has proved to be, problematic. So I'm here to share the general principles around double entry. In all the financial statements that we prepare, there are 5 elements: asset, expense, liability, income, and capital. And you need to understand the principles of double entry around these 5 components. So for assets, if in a transaction an asset is increasing, the asset account needs to be debited. If in a transaction an asset is reducing or decreasing, the asset account needs to be credited. I'll give an example. If you buy motor vehicles, so motor vehicles are increasing, you need to debit motor vehicles account. I'll give another example. If you are using money at the bank to pay wages and salaries, your bank balance is reducing. The bank account needs to be credited. There are times when certain transactions that occur, they have got to do with the transaction will reduce an asset, but the recording has to be done in a different account. An example of this one is when, for instance, you sell goods on credit, you create receivables, which are supposed to be debited. In an event, you make an allowance for receivable balance unlikely to be recovered. The allowance for receivables account needs to be credited. So when you go to your trial balance, that is the reason why receivable balance will always sit on the debit, while the allowance for receivables will always sit on the credit because they have the effect of reducing the receivable balance. The same applies to non-current assets and accumulated depreciation. You need to understand that non-current asset gets debited because as they increase, the account should be debited. When you make an allowance for depreciation on the non-current assets, the allowance for depreciation account needs to be credited because it has the effect of reducing the value of an asset. So that is the double entry rule at work. The same applies to expenses. They have the similar principle to assets. When an expense is incurred, you're supposed to debit the expense account, whether the expense is paid for or not. So if it is not paid for, it will still have to be debited. Based on the accruals concept rule, the credit entry where you have paid goes to bank. Where you have not paid, it will go to a general payable. For instance, if you are paying for electricity, then you are going to have electricity payable account to be credited. Otherwise, in all circumstances, expenses accounts should be debited when the expense arises, which entails the expense is increasing. Liabilities have the opposite effect to assets and expenses. In fact, liabilities, incomes, and capital, they have the same principles. When they are increasing, you credit the accounts. When they are reducing, you debit the account. An example, the business gets a loan from the bank. The loan account will be credited. When they pay part of that loan, the loan account will be debited. When you sell goods, which is income, the sales account will be credited, which is an income account. In an event, some of the goods that have been sold are returned, the sales returns, which is a separate account, which reverses an income, is actually going to be debited. When the owner introduces money into the business, capital account will be credited, which is a form of a liability to the owner. And in an event the owner makes drawings, the capital account will be debited, or a separate account called drawings account will be debited. So understanding these rules is critical for anyone that is actually taking financial accounting. It's a backbone for accounting. All other topics are based on your understanding of this double entry. So if you do not understand the double entry, it becomes a challenge for you to deal with a lot of other issues in various topics of the subject matter. So we will look at, for instance, this particular question, our understanding of double entry at play. This is something to do with errors. Much of the errors question actually require our understanding of double entry. If we don't understand double entry, we cannot make the correction of the error, unfortunately. So this question says, a company's statement of profit or loss for the year ended 31st December showed a net profit of 83,600. So this is the profit that was calculated, 83,600. It was later found that 18,000 paid for the purchase of a motor van had been debited to motor expenses account. So here the issue is, when you know what account should have been recorded and what kind of entry should have been made, then it becomes very easy for you to make a correction of the error. So here it is, the business purchased a non-current asset, but it went on to debit a motor expenses account. So we have just said, when an expense increases, it will be debited. So by debiting motor expenses, we actually increased an expense. If we increased an expense, this net profit was reduced. I mean, any expense in the profit or loss reduces the net profit. So if by error we made a debit in the expense account, the net profit was reduced. The next paragraph says, it is company policy to depreciate motor van at 25% per annum on a straight line basis with a full year charge in the year of acquisition. So what it is that when you look at the effect of this error, the fact that an entry was missing from a motor van account, it means that whatever depreciation that was charged was also less by 25% on the same 18,000, which is a 4.5, which is a 4.5 then. So what happened here is that this profit, because it contained an alien expense, it was less. We need to add back that amount to normalize the net profit. And also the fact that this 18 was missing from a non-current asset account, it means that this profit was calculated without the 4.5 depreciation expense. So now we are supposed to say less the 4.5, the 4.5. So that is how you would get your corrected net profit. So your understanding of double entry will help you go around the issues of even correction of errors to an extent that you are able to see things the way they have affected either the trial balance figures or the calculated profit. And so that is what should have been done in this particular question. So all this comes from our understanding of double entry and where amounts will get recorded and the effect they will have on the calculated profit. Here is another theory question on double entry. Which of the following statements is correct? So we just looked at 5 elements: income, expense, asset, liability, capital. And in the past exams, a question like this has come. So a credit entry increases an asset. This one is not correct because an asset will increase by a debit entry. B says a debit entry reduces an expense. This one is not correct because an expense will reduce by a credit entry. A debit entry increases an asset. C says a debit entry increases income. This is also not correct because income will increase by a credit entry. D says a credit entry increases a liability. And yes, this one is correct because liability, incomes, and capital, they increase by credit entry. Expenses, assets, they increase by debit entry. So you can see that your lack of understanding of double entry could cost you a very easy question like this one in the exam. So can we make sure that we can go back to our double entry notes and appreciate the principles of double entry before our exam next month? Other issues that have been raised by the examiner in the examiner reports, issues of adjustments. Adjustments go around accruals, prepayments, receivable expense, allowance for receivables, and depreciation. So many are at times that as a candidate, you are supposed to develop the skill of deriving from these adjustments, deriving amounts to go to the profit or loss, as well as the statement of financial position. This is where the biggest challenge is We don't seem to get it. Most of the past candidates have struggled in the exam to get how much should be taken to the profit or loss as expense or income, and how much should be taken to the statement of financial position as asset or liability. So your ability to deal with this is a critical part of your exam preparation, and it will usually reward you more marks than the figures that you just copy and paste from the trial balance into your answer. So let us get through a few of these so that we can understand something. So this particular question is on accruals and prepayments, which came in the just ended March 2025 exam. One of the two, of course, either DA or CA. So a company receives rent from a large number of properties. So immediately you see receives rent. Remember, rent can be an income or it can be an expense. So, but the tone of the language should tell you what it is. Like here, receives the rent. It means we are talking about an income. The total received, not the total paid, okay? The total received in the year ending 30 April 2023 was this amount. So this is important. Then the amounts of rent in advance and in arrears at respective year ends were as follows. So the figures must have just moved, but this heading is for this, and this is for these two. So if we are looking at the year ending April 2023, you must bear in mind that such kind of a year-end date must have started 1st March 22. And so when you come to the columns, what is saying that should have been 1st May, sorry, 1st May 22. Okay, so whatever is saying year 2022, these are supposed to be opening balances. So these are opening balances, opening. And these are closing balances because of the year 2023. So 1st May or 30 April, one and the same thing, okay? As long as it is 2022, opening balances, 23 closing. So at this point, I want to share with you, you need to understand where you are looking at rent income, this rent receivable account. There are 4 possible balances on this account: opening accrual, opening prepayment. So for an income account, any prepayment at the beginning is actually supposed to be here. It's like we owe whoever paid us in advance. It's a liability. If income has been prepaid by the one paying to us, before we provide the service to them, we owe them. Then any accrual at the beginning, we have earned the income, but we have not yet received, should come like this. By virtue of opening balances, prepaid accrual is also the brought down below the totals. So the accrual at the end sits like this, meaning accrual inside the account will be there. The prepaid at the end will sit below the totals like this, meaning inside the account, it can only be on the opposite of the credit side. Once you understand this principle, and then you also understand the double entry for when we receive. When we receive, our bank account is debited, meaning the income account is going to be credited like this. Okay? Then also understand that incomes are credited to the profit or loss. If incomes are credited to the profit or loss, they must come from the debit side of an account. So your P&L figure for an income can only come from here. And so here we are. We have the 481,200, which we received. And then you come to these two columns for the opening balances. The advance is a 28,700 to be put on the credit there. Then the 21,200 on the debit. The closing balances take interest in the inside entries because they are the ones that will affect your balancing figure. So the arrear or accrual, which is 18,400, will come like this. And the prepaid, which is 31,200, will come like that. So that when you add this prepaid, accrued, bank, subtract what is on the opposite side, the balancing figure is your profit and loss figure. Okay? So at your adding of this and then subtracting the opening accrual, closing prepayment, you get your P&L figure. The question is asking what amount of rental income will appear in the statement of profit or loss for the year ending 2023. And so that will definitely give you this as a balancing figure. Now, this is income. This is income. Whatever I've said, the opposite applies to an expense. The opposite will apply to an expense. I'm just trying to get to a question. So this one is on accrual prepayment, but involving an item of an expense. So your understanding of an expense account, so this one is electricity. If you have prepaid, it will come here because you have paid in advance. You're like, owed, it's an amount receivable. In an event you don't utilize the service, you will have to be refunded. For an expense accrual, brought forward comes like this, brought forward. By virtue of the brought forward, also the brought down below the totals there. So the accrual comes like this, but we are not interested in these below the totals. We are interested in those inside. So if the brought down is on the credit, it means that the carried down will be inside like this accrual. Then the prepaid will be like that. For an expense, when you pay, your bank account is credited, meaning the bank entry in the expense account can only come to the debit side. So here we are. Repayment brought forward of 550. It comes here, 550. Then what was paid, the 54 will come here. Then accrual carried forward at the end, 650 there. Okay, we didn't have this, we didn't have this in this question. Meaning when you just add those three, you are at your profit and loss figure. We are at your profit or loss figure. So let us make sure that we understand how to adjust for these prepayments and accruals for expenses as well as for income items. The other thing is that the topics like sole trader, partnership, limited liability company, incomplete records, clubs, okay? All those topics, they will carry these elements of accruals and prepayments. And many times you are required to know what will go to profit or loss, which you can get by simply putting down an account like this. Then whatever the closing balance is here, they go to your statement of financial position. So alternatively, this question with the same data, the question would have been, what amount should be taken to the statement of financial position as at 30 June 2023? So what goes to the statement of financial position is the accrual carried forward or prepayment carried forward. In this case, the 650. And because this is an accrual for an expense, it's a liability here. As you can see, it sits on the credit. It is a liability. It will go under current liabilities in the statement of financial position. Okay. So that's about prepayments and accruals. Let's talk about receivable expense and allowance for receivables as another adjustment which give people some good amount of problems. So here, receivable expenses, they are an expense indeed. They are an expense. This receivable expense has got two components. The two components are the irrecoverable date written off plus movement in allowance. Movement in allowance. That's what will give us this particular receivable expense. Movement in allowance. When you make an allowance for receivables, what you are saying, we think that this percentage of whatever closing balance may never be recovered, and we make an allowance at the end of each year, and we make an estimate of that at the end of each year. But between the beginning and the end, this allowance amount will be moving either upwards or downwards. So what happens is there will be an increase in allowance or a decrease in allowance. If there is an increase in allowance, the receivable expense of irrecoverable debt, you have to add the increase in allowance for you to get total expense. But where there's a decrease in allowance, you have to subtract that decrease in allowance from the irrecoverable debt written off for you to get the total expense to charge in the statement of profit or loss. Okay? So this particular question says, at 30 June, the company allowance for receivables was 39. So this is allowance for receivables account. So brought forward 39. Then we are told at 30 June, so the first figure was at 30 June 2022. Then the next one is saying at 30 June 2023, which is at the end of the year, the trade receivables totaled 517. Then we are told it was decided to write off debts amounting to 37. So there is this account we call receivable expense. Receivable expense. You can call it recoverable date expense. It's one and the same. So whatever is written off like this 37 comes straight here. Another common question you get is double entry. What is a double entry for? Irrecoverable date written off. So you credit receivables and debit receivable expense. Then at the beginning, we have that opening allowance. Then after writing off a 37 from the receivables of 517, we are told an allowance for receivables to the equivalent of 5% has to be made based on the past experience. Okay? So meaning this 517,000, take out the 37, irrecoverable date written off. The balance on that amount is the one you apply the 5% on. So this is the 480, and an allowance of 5% of that 480, which is 24,000. So what it is that this is a closing allowance, 24,000. This carried down. So this is a decrease in allowance. It has reduced by a 15. So there's a 15,000 reduction. This reduction should come to the receivable expense in double entry. So it's on the debit, it should come to the credit like this. Remember earlier I said, any reduction in allowance reduces the total receivable expense. And any increase in allowance will increase the total receivable expense. So like this particular 15 entry on the credit from the allowance account entails that our receivable expense is now 22 to be taken to the profit and loss. Okay, so this one is a common adjustment in a sole trader, partnership, limited liability. Make sure that given your allowance in the trial balance, it represents opening brought forward allowance. The one you are told to make in additional notes represents the closing allowance. Then the movement, if it is an increase, to be added to irrecoverable debt. If it is a decrease, you subtract from irrecoverable debt for you to get the expense to go to the profit or loss. However, you need to also know how you will get the figure to go to the statement of financial position. So when you are told it is decided now to write off, it means this has not already reduced that. So first you reduce like I have done here, then you get a 480 on which to apply a 5%. But there are times when you already have irrecoverable debts written off in the trial balance, you are not supposed to subtract them from receivables. When they are sitting in the trial balance, they have already been accounted for. All you need to do is get your receivable figure, apply the rate for allowance, then compare trial balance allowance with the allowance you have calculated. Increase increases the expense, decrease reduces the expense. Then subtract the closing allowance from your receivable figure to get how much will go to the statement of financial position as receivables. So like here, 480 minus 24, which is a 456, is another potential question you could be asked to say how much will go to the statement of financial position as receivables. So take out the closing allowance. In an event that the irrecoverable debt was just being written off, subtract it also from the receivable figure. So that's on allowance for receivables. The other issue that has raised a lot of concern from the examining team is candidates' misunderstanding on the concept of control accounts. Later, there's a section B question on payables control, which we shall talk about. But this multiple choice question is on receivables control. I wish to remind everyone that normal balance, because receivables is an asset, normal balance should sit on the debit. Any credit sales, which increases what the customer is owing, sits on the debit as well. Then whatever reduces what the customer is owing gets taken to the credit side of an account. So transactions like money received from the customer will come on the credit. Returns inwards, the goods that have been returned by the customers will reduce what the customer is owing. Any discounts allowed, which should actually match with a payment, should come to the credit. There is also irrecoverable debt. It actually reduces what the customer is owing. There are times when the customer, when they made this payment, they overpaid. Maybe they were supposed to pay 300, but they pay 350. When you refund a customer, it can only be opposite entry. So any refunds to customers should come to the debit to cancel part of the bank entry on the credit. There are also times when a customer has been owing for too long and you charge them interest. So anything increasing what the customer is owing, so interest on overdue dates, should come to the debit. Then there are times when the same customers are also our suppliers, and we don't want to say, here's your 50 kwacha, give me my 100 kwacha. We want to set off what we are owing each other. Any set off can only be where the payments go on the credit. Okay? So for us to be able to answer a question like this one, we need to understand the content of the control account. What goes to debit, what goes to credit? So this example goes like, during a period, ABC has the following transactions on the trade receivables control account. And so there's sales. So there's sales there, which should come to the debit, 125. Then cash received from the customers, which is the 50,000. Irrecoverable date, which is a 2,000 there. Then the balance brought forward. This is carried forward, sorry. It was hidden from my end. So the balance carried forward, meaning closing balance. In the absence of any mention, take it, it's a normal balance. It's a debit balance. So a debit balance on the receivables control account is supposed to be on the debit, the closing balance, meaning the inside entry will be on the credit like this. This is 95,000. And the question is, what was the opening balance at the beginning of the period? Meaning how much were the customers owing? Okay? So let me remind the candidates here that any of the entries that you see in the receivables control account is a potential question. Next time you may be given everything else, the question is asking for how much cash was received from the customers. Next time you may be given everything else and the question is asking to say, how much were the credit sales? And so on and so forth. So any entry you see in this account is a potential question. So that being the question, asking for the opening balance, the normal balance sits on the debit here. Unless otherwise specified, we could be asked for a unusual balance on the receivables, which then will be a credit balance. So you add everything on the credit, which is 95, plus the 2, plus the 50 there, then minus the only entry on the debit, 125. And this leaves us with a 22 on the debit. So 22,000 there. And you can see it's a 22 on the debit. Especially questions that have answers like this. A lot of people will actually go for the wrong side of the account. When the answer is debit, they say credit. So people, that is how you needed to get the answer to this question. Can we make sure as we prepare for our exam next month, we are comfortable with transactions in the receivables control account and the payables control account? We will be reaching a section B type question that came in last sitting exam. I have some information with me here where the examiner has indicated that only one candidate at the sitting managed to obtain at least half of the marks available, meaning managed to get 10 out of 20. The rest of the candidates at this sitting could not even reach half of the available marks on that question. So we'll get to it later. Another adjustment has got to do with issues of inventory. Remember, inventory that should appear in the financial statements must be inventory as at the reporting date. Inventory as at the reporting date. So in this question, we are asked to say, what was the value of the inventory on this date, which is the reporting date? Okay? Yeah. Given what happened. So on this date, 31st December 21, the inventory counting did not take place. Apparently, it took place, according to this question, 5 days later. Okay, so 5 days later, at about 5th January, here, that's when the inventory took place. So we are given the value as at this date, and purchases, returns, and then sales that took place between this date and that date. So what we are supposed to do is to reverse all the transactions that took place for us to adjust, you know, the figure of inventory. Okay. So N prepared their financial statements. The inventory count done 5 days after the year end gave a total of, so here on this date, 625,200. But for us to arrive at this, there are these transactions that took place. We bought goods, we returned some goods, and we sold goods. And for whatever we sold, we applied a 40% gross profit margin. The examiner has also indicated a lot of candidates have a challenge working with a gross profit margin and markup. So let us look at this issue deeply here. So what happened here is that these purchases, by virtue of them being purchases, are at cost. The purchases returns are also at cost, but the sales are at selling price. When you're looking at inventory, inventory needs to be valued using cost. Unless the net realizable value is less than the cost, then it must be shown at its net realizable value. That's the IAS 2 rule. So what we have here is that included in this figure are the goods we bought between this date and that date. They must come out, they are already at cost, so we shall say minus 80,450. Then the returns, which were taken back, they have reduced this figure. As long as they took place between this and that, we must add. So we are saying plus the returns 1,250. What we sold has been taken out of this figure. It must come back. So we must say plus the sales. But the sales must be converted to a cost. So this is a selling price amount. What will be the cost amount? That is what we need to calculate using 40% margin. So in accounting, you are told margin is gross profit expressed as a percentage of sales. And in margin, selling price is 100% figure, while the gross profit will be the same percentage given. So in this case, 40%. Meaning cost of sales should be the difference between 100 and 40, which in this case is a 60% figure. Let us understand this relationship every time we have markup, margin. So because sales is at sales value, you need to convert it to a cost value. If you want simple, straightforward mathematics, you can use cross multiplication, where you are saying if 16,000 is equal to 100, then 60 is equal to X, and so for X. Otherwise, it's as good as us saying, what is a 60 proportion in this 100 proportion figure of 16,000? Okay. So the 60 proportion in that 100 proportion figure is actually 9/6, meaning 9/6 is the cost. 9/6 is the cost. The balance is the, so in short, a 9/6 needed to be added back because it has left here. It has left, it was a sale, okay? But you need to convert a sale to a cost because the inventory works with the cost amounts. And so when you do that, you get your corrected inventory figure when you add and subtract as necessary there. Okay. So that's about issues of adjustments. Let's talk more about errors. Errors is another hot issue in the financial accounting exam. So when I look at the excerpt from the examiner's report, the performance in both the CA1.1 and DA1 on a question on correction of errors was actually very poor. Very, very poor. Candidates were not able to make journal entries correctly, not able to complete the suspense account, not able to make a correction to the profit that was earlier calculated without correcting the errors. The candidates could not correct the net profit, and they were unable to redraft the trial balance to reflect the correction of the errors. Okay, so those are the main issues. Those are the many issues as highlighted in this slide: failure to identify, account not recorded or wrongly recorded, automatically not knowing the journal entry to correct the errors, and issues to do with, posting those errors to the suspense account and using them to make necessary adjustments to the net profit. I am not here to go into the details of the description of the errors, but there are those errors which, when they are committed, the trial balance will still balance. For such errors, when you are correcting, don't think about suspense account. It means that from within the error description, there'll be one account to be debited and one account to be credited to make a correction. So for instance, if you are told rent paid of 100 kwacha was debited to bank account and credited to rent, that is complete reversal error. The account that should have been debited is credited. The account that should have been credited is debited. Whenever an entry is made on the wrong side of an account, whether as a partial entry or complete reversal entry, what you're supposed to do is double the amount and put on the correct side. Okay, so in the example that I've just given, rent and then bank, you paid rent, but you debited bank and credited rent when it should have been the other way around. So always when an amount is on the wrong side, double it to bring it on the correct side. Why double it? The first 100 cancels the wrong amount sitting on the wrong side. The other 100 is the correct entry. So you do this for any type of transaction you are told is sitting on the wrong side, but of the correct account. Double it and put it on the, yeah. So for those errors that make the trial balance to balance, they have nothing to do with suspense account. There will be two accounts to be identified, to be recorded to make a correction. Then there are these errors that are disclosed by the trial balance, and these are the ones specifically highlighted that they give more challenging circumstance to the candidates of this exam. So part omission, meaning a transaction has taken place, one account is recorded, the other is not. So cash sales, you have debited cash, you haven't credited sales. To correct, credit sales, then debit suspense. So for all these errors that are disclosed by the trial balance, the double entry rules are not adhered to. And so what happens is that you need to adhere to the double entry as well as making entry in the suspense account to get rid of that balance. Because when the trial balance does not balance, it will bring about a suspense balance, which is the difference between the debit and the credit of the trial balance. So when you make all the corrections, that balance must disappear, okay? But transposition, a transaction is for 75. It is recorded as 57, for example, okay? So meaning one account is correctly recorded, the other one is wrong because it's part, okay? So focus on the wrong account. If the amount recorded is more, make an opposite entry of the difference, double entry suspense, okay? So in all these errors that are disclosed by the trial balance, double entry goes to suspense. So all you need to do is identify at least one account to make a correction in, and then double entry goes to suspense. Single entry or one-sided entry, both accounts are debited or both accounts are credited. That's the error. So one of the two is correct because double entry means one must be debited, the other must be credited. So the one that is correctly recorded, leave it alone. Deal with the one that is not correctly recorded. So for instance, it should have been debited, it's been credited. In that account, double the amount and put on the correct side, double entry suspense. It's as easy as just that. Undercast in one account. For instance, you are told the purchases account is undercast, meaning it's less than it should have been. If it is less, and you know the nature of the balance in the purchases account, it's debit, meaning you need to add that undercast amount to normalize the balance, double entry suspense. If you are told the purchases account is overcast, and you know that a purchases account carries a debit balance, put on the opposite if it was overcast. So credit purchases, debit suspense, okay? So that is about those that affect the trial balance, meaning the trial balance will not balance. Let's look at this particular one. MCQ question 8, errors affecting trial balance. Dixon recorded an amount of 3175 for rent and rates paid. Both the rent and the bank account were debited. So it's a normal transaction, rent and rates account, bank account. We paid and we are told both accounts were debited. So you said bank here, 3175, and you said rent here, 3175. This is single-sided entry. Both accounts are debited or both accounts are credited. Now, one of these two accounts should be correct. So your understanding of double entry will be able to show you which account is correctly recorded. So when you are paying something, the bank account is supposed to be credited. Then when you pay for an expense, the expense account should be debited. So this account is correct. This one is not. So focus on the account which is not correct, make a correction in their double entry suspense. So what correction is required in this bank account? Every time an amount is put on the wrong side, you need to double it and put on the correct side. So this 3175 times 2, 6350 is the correcting entry, meaning double entry, your suspense account must be debited with 6350. So it's so easy to deal with these errors that affect the trial balance. All you need to do is identify first one account which has an issue. It's wrongly recorded, okay? Or the amount is wrong. The recording is correct, but amount wrong. Normalize the amount, double entry suspense. That is what you need to do. And hence, here we are. The correcting entries are supposed to be this. Okay. Another MCQ on errors affecting the trial balance. Which of these errors would be disclosed by the trial balance? Disclosed by the trial balance, it means that the trial balance will not balance. That's what it means. The trial balance will not balance. When you look at answer D, a purchase of 25 was omitted entirely from the books. Any transaction that tells you entirely omitted, it means no debit, no credit has been made, and such errors are not disclosed. So this one cannot be an answer to this question. C, credit sales of 3,000 entered in both double entry as 300. So again, this is like undercast, but involving two accounts. As long as an error is committed in double entry, the trial balance will balance. This is not an answer to the question. We are looking for what will be disclosed. B, selling expenses had been debited to sales account. If you check, this is an expense. When it is incurred, the expense account should be debited. So the fact that we made the debit entry, quite all right, but in a wrong account, we debited sales. This error will cause the trial balance to balance. So the quietness on the other credit entry, probably in the bank account, it was credited. The fact that it's quiet, it means it was correct. The issue is on the debiting. We didn't do it in the selling expense account, but we still debited the wrong account altogether. This is error of principle, because this is an expense, that is an income. When you make an entry in a wrong account and that wrong account belongs to a different class from the correct account, that's error of principle. A check of 9.5 from C. Smith entered in Smith account and control account as 5.9. Okay? So meaning the bank account had the 9.5 correctly debited to the bank account, but the credit in the personal or control account was a different figure altogether. This is part transposition, and hence That should be the answer to the question. That should be the answer to the question. MCQ 10, errors affecting the trial balance. We are still here. This appears to be a hot issue in the financial accounting exam, and so there are enough questions for us to look at matters. For the errors that affect the trial balance, remember the trial balance will not balance usually. So you can see those debit credits, they are very different balances. The 365,800, when you subtract the other amount, gives us a difference of which goes to the suspense account. So check the side which is higher. The credit is more than the debit. The side which is less, that is where the suspense balance sits. So debit, meaning this opening balance is on the debit. The 5375 is on the debit. That is the opening balance in your, so by virtue of the side of the trial balance less, that's the opening balance, that's where it sits. The question is, so a suspense account was opened for the difference and we have opened it. That's the brought forward. The question is, which of the following errors would increase the difference on the suspense account when corrected? So a simple double entry understanding. What will increase the balance on an account is what will be recorded on the same side where the balance is sitting. In short, this question is asking us, which of the statements A, B, C, D will bring about an entry on the debit? In short, that's what the question is asking us. That's what the question is asking us. Okay. So if I may start from answer D, 6335 paid for commission has been correctly recorded in the cash book, meaning it has been credited there and debited to rent account. Debited to rent account. This type of an error has nothing to do with the trial balance because there is at least a credit in the cash book and a debit, even if it is in the wrong account. Double entries is still adhered to. The fact that commission and rent are expenses, this is error of commission. When one part of double entry goes to a different account and this account is of the same class as the correct account, that is error of commission. So this has nothing to do with suspense. C, 4830 paid for repairs to buildings has been debited to land and buildings asset account. Okay, again, when you pay for repairs, you're supposed to debit repairs, but we went ahead to debit land and the buildings. The fact that this is an expense and that is an asset, this is the error of principle and it has nothing to do with suspense account. B, a credit note for a supplier, Mr. WK 437, has been posted to the account of Mrs. VK. Again, such errors are issues of error of commission. You take it, both the individuals are suppliers. And so you, instead of debiting this supplier, you debit another one. That will cause the trial balance to balance. So once you understand B, C, D, no argument about A, but let's look at what it is. The bank overdraft balance of 7230 has been omitted from the trial balance. Remember, bank overdraft in the trial balance sits on the credit like this. Like this. So if it was omitted, then a credit entry is missing. Whether you look at it from bank overdraft account or the trial balance, it doesn't matter. But what is important is that a credit balance is missing. So to make a correction here is you need to think about crediting either the bank account or trial balance with the 7230 and debiting suspense. So this 7230 will come to the debit of the suspense. And hence it will increase the balance sitting on the suspense account. Okay? So that's about that issue there. Errors and effect on calculated profit. Let me quickly explain here that whenever an error is committed and it involves items of the statement of profit or loss, just know that whatever profit that was calculated has been affected. Okay? Whatever profit that has been calculated has been affected. So for instance, if sales account was overstated and it's an income, it means profit has been overstated and you need to reduce it. If sales were understated, it means whatever profit calculated is less. To make a correction, you need to add. If it is an expense which has not been recognized, it means that the profit is overstated. To make a correction, subtract that expense from the profit. Okay? So let's try and look at this particular section B type errors question. I'll try to just pick a few of the transactions. I'm looking at the time, so we'll pick a few of the transactions and talk about them. So the bookkeeper prepared a trial balance from the business accounting records on 31st December. The trial balance failed to agree by 19,507. So 19,507 there. A shortage being found on the credit. So if a shortage was on the credit, definitely we are looking at, if we talk about suspense account, the balance is on the same credit, 19,507. Okay. Let's look at the issues. So a suspense account was opened to record the difference. After careful examination of the accounting records, the following errors were discovered. Number one, rent account had been undercast. You know, rent is an expense and it has a debit balance. If you are told it is understated, it means the same balance on the debit is less. To normalize it, you need to make a debit entry in the rent account. So the double entry for this error is actually debit rent and credit suspense with the same amount. Remember, one of the mentioned errors that affect the trial balance is undercast involving one account or overcast involving one account. And here we are. It affects the suspense. So meaning suspense account should be credited. The 19,040 is coming like this. The debit is to the rent account. So when you check the requirement for this question, here, the requirement here, prepare the journal entry or entries to correct the errors. Narrations are not required. Then prepare the suspense account after the errors above have been corrected. Then show the calculation of the corrected net profit. If the profit before was actually 97,320, So when you are told of journal entries, I'll be talking about Roman 1 and 2 at the same time. Journal entries is simply for you to say what account should be debited and what account should be credited to correct the error. So here, debit, rent, credit, suspense. Let's look at number 2. The sales day book had been undercast by 25,897. So sales day book there, meaning the total being undercast, represents the understatement in the sales account. Remember, the total of the sales day book goes to the sales account. It's as good as the sales account was undercast by that amount. Now, if you remember, when you're looking at control accounts, the double entry from the sales day book total is credit sales and debit receivables control. In this case, it is actually assumed that the individual accounts are part of the double entry. So what it is that as long as the entries in the sales day book are correct, the individual entries are equally correct. So that one part of double entry is actually correct. It's only the sales account which is not correct. And so double entry for this one is credit sales to normalize it and debit suspense. So this particular one is coming like this here. You are saying sales and the amount 25,897 is coming to the debit of the suspense account. Okay. Number 3, wages account had been overcast. If you know that an expense maintains a debit balance and you are told it's overcast, it means whatever is sitting on the debit is too much. To make a correction, make an opposite entry. So 12,650 should go to the credit. So double entry for this one is actually debit suspense, credit wages with that same amount. So we are answering Roman 1 and 2, making journal entries showing which account should be debited, which one should be credited, as well as making entries in the suspense account. So here you will say wages on the credit side of the suspense, and that amount, how much is it? 12,650 there. Okay. The last one, or it's second last. The sale of computers had been credited to the sales account. The sale of computers had been credited to the sales account with 2135. This one has nothing to do with the suspense, but journal entry is required to make a correction. If you credit a sales account with a sale of a computer, that is wrong. That is wrong. So to make a correction in the sales account, we are actually supposed to debit sales. So in terms of journal entry here, we are saying debit sales, then credit computer disposal account. That's the journal entry. So you can see you cannot do well on a question like this if your knowledge of double entry is very poor. So dear candidates, let's make sure that we polish up our knowledge of double entry for the sake of this particular exam. Otherwise, errors correction and double entry are inseparable. I think on this one, I'll skip the B part. If we shall have time at the end, we may come back. The B part required redrafting the trial balance after correcting the errors. If we shall have time, we will try and come back. But let me look at first other issues. Okay. This one is on control accounts. It came in the CA exam. It was question 6 in March 2025. And the record I have is that only one candidate again managed to get half of the available marks out of about 47 candidates that sat for this particular exam, which was quite bad, quite bad. Okay, so let's look at the requirements. Prepare the adjusted payables control account for B. That includes the adjusting entries and corrected balance. B, prepare a reconciliation of the list of balances to the correct or corrected control account. C, explain 2 purposes. There were no issues on the C part, as reported by the examining team. D, prepare journal entries to record how the entries would be posted to the general ledger accounts for only the following errors listed above. So only those numbers. So let's see. We will just look at a few of these again so that we can have chance to look at something from every other area. So B buys farm produce from various farmers in Imwense and supplies this to various supermarkets, mainly on short-term credit terms. On 31st December 2024, the balance on payables control account of B was this. And the total of the list of payables from the payables ledger was that. So please, let's understand the general principle. Personal accounts of suppliers are maintained in the payables ledger. And so whatever you are told the list of payables is like the accumulated total of all the personal accounts of suppliers in the payables ledger, it gave this. Under normal circumstances, this balance is supposed to be equal to the payables control account balance maintained in the nominal ledger. But because of errors omitted here and there, the balances usually tend to be different. And as an upcoming accountant, you need to develop the skill to make sure that you can make corrections of these. So let me get to a few entries, like part A, that requires our corrected payables control. Corrected payables control account. Okay. So the opening balance on this control account as given 243.90. Normal control account balance should be credit. Okay, so 243.90 opening balance. Then you need to go item by item to find what should go to adjust what. Then B is looking for corrected list of payables. So your starting up is the uncorrected balance. That's your starting point. So this uncorrected balance, 241,320 there. So 241,320. Okay. So here, let's look at a few of these. Investigation of the reason for the difference indicate the following. Purchases amounting to 1314 had been entered on the wrong side of the supplier's account in the payables ledger. Underline, supplier's account in the payables ledger. This can only affect our list of payables. Why? Anything that affects the personal account of the supplier or the personal account of the customer affects your list. Then anything affecting the total from a book of prime entry or straight you are told was not done correctly in the control account, just know it affects the control account. Okay? So here, these are purchases entered on the wrong side. For you to know what correction to make, think about an individual supplier. Purchases should appear there. If they were put on the wrong side, they were put here, 1314. How do you make a correction? Double this amount and put there. Anything you are supposed to credit should be added to this balance. And so that figure, 1314, should actually be added, which is 2628, should be added to that balance. Here, the 2628 should come here. The narration here is not strict. You can say anything that makes sense. You can say mispost, anything. Amount recorded on the wrong side, anything will be accepted as long as it makes some sense. So no effect on the control account. Anything affecting the personal account of the supplier or customer affects the list. Number 2, debit balances in the payables ledger amounting to this had been omitted from the list of payables. If you understand your control accounts, credit and debit balances are allowed, are possible in the payables ledger as well as the control account. So where you are dealing with a debit balance, when you are accumulating this balance, the debit balances are supposed to be subtracted. But we are told this debit balance was omitted, meaning go to this list and subtract. It's a debit balance because this is an accumulation of all credit balances and it reduces by any debit balances. So there we go. Item number 2 should just have been a subtraction. 25,700 there in brackets, like this. Okay? Going to the third item, I'll do maybe the first 5. A payment to a supplier, Mubanga, of 3,500 for a cash purchase of vegetables had been correctly recorded in the cash book. Okay, so this question, initially, it's not supposed to have the word not. I'm sure some correction should be made, but was posted to his account in the payables ledger. If you know your payables, we don't record cash purchases in the payables. Okay? So the error here is that it was actually posted to the payables account. So if it was posted, it means that the payables account had actually been debited. The payables account was actually reduced in the payables ledger. So to make a correction, we are supposed to add the 3,500 to the list. So this one is going to come as a plus to the list of balances, 3,500. 3,500. Number 4, an invoice for 46 recorded in error in the purchases returns daybook instead of the purchases daybook. So when the error involves an entry in the book of prime entry, this should affect both the list and the control account. And so here we are, it was put in the returns, meaning it reduced both these balances. So to make a correction, we are supposed to double the amount and add to both balances. So how do you add in the payables control account? You are supposed to put here. When you add that, is it 92? And here also you put 92. It's a plus 92,000. So when the error affects an entry in the book of prime entry, it should affect both the control account and the list of payables. Okay? We can talk about these others. A payment of 9,000 was made to settle a balance of 10,000. But the discount, so the payment was 9, it was settling a balance of 10, but the discount was not recorded in the personal account of the supplier. Anything affecting personal account affects the list. So in short, we need to record in the personal account discount received, which has not been recorded. So discount received is supposed to reduce this balance. So it is supposed to be a minus 1,000 there. Okay. This number 6, a settlement by contra entry with the receivables ledger of 2-1 was recorded in the supplier's personal account, but no entry in the control account. So contra, they are like a payment. They should reduce the balance of the payables. And it was not recorded. It's clear that it was not recorded in the control account. All you do is go to the control account and debit it. So the set off always sits here, set off in the control account. 2-1, like this. Okay? And you go on and on and on. If you look at 7, the purchases daybook was undercast by 17,128, meaning purchases were understated. So if purchases are understated, go to the control account and credit this 17,128. A debit balance of 2565 in the payables ledger had been listed as a credit balance, meaning instead of being subtracted, this should have been subtracted. It was actually added because the nature of balances in the payables ledger are credit. So a debit balance should be subtraction. So to make a correction, you need to subtract twice the figure. This times 2. Okay. I think let me end here on this question so that I tackle other questions as well. Let me just check maybe 1 or 2 from the journal entries. This is 4 and 6 and 7. 4 and 6 and 7. So like 4, it's asking for journal entries for 4. Invoice of 46 recorded in error in the purchases return daybook. So the fact that it went to the purchases returns daybook, it was actually part of what was sitting as in this double entry, debit, purchases returns, and credit, payables. Sorry, debit, purchases returns, the other way around, sorry. Debit payables, not debit purchases returns, debit payables and credit purchases returns account. This is an error. This is an error. It was part of this error. Meaning to make a correction, we need to make these opposite entries. Meaning to correct, this is now where we are supposed to say debit payables and then So I am mixing up again. Debit purchases returns, purchases returns, and credit payables. This is for correcting entries, correction, with that 46. Now, that is the correction part of this error. This should have been recorded in the purchases account, meaning the double entry for the purchases account is actually missing. It's actually missing. What is this double entry for the purchases account? So this is where we are supposed to say now debit purchases and credit payables, 46. So that is why we are using the amount twice this figure. As you can see, it is bringing us to reverse the error. It is bringing us these entries, and also to make a correction of the correct entry, it is bringing us the same entries. And so that will be the double entry to make a correction of that particular item. Double entry for 6, a settlement by contra with the receivables ledger of 2-1 was recorded in the supplier's personal account, but no entry was made in the control account. Okay, so this is a contra entry. When you look at a contra entry in the control account, it's supposed to be on the debit. So one entry is debit control account, payables control account with a 2-1. And the fact that this has already been recorded in the personal accounts, the credit entry goes, this is the payables, and this will go to the receivables. Control 2-1. So it is only the control accounts that are missing this transaction. The personal accounts in the receivables and payables ledger have already been recorded. So just those two for the journal entries. I hope that gives us some idea of what needs to be done. So again, it borders on your understanding of double entry for you to be able to make corrections of these errors. If double entry is far from us, it will always be a challenge for us to understand the correction part of the errors. We can move on to another issue, statement of cash flows, where it's been noticed that most of the candidates don't even understand the format of a statement of cash flows. We are far from understanding the format. So there are 3 headings: cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Okay? I always like to mention that a statement of cash flows at your level will always require you to use the indirect method. Indirect method, you start with a profit figure from the statement of profit or loss, which is a profit before tax. So either the question gives you the whole statement of profit or loss, or it will just give you a profit before tax figure in the notes, and it will give you statements for last year and this year. So regardless of, all the figures you are supposed to use will be readily available. Then understand that this profit before tax figure should be adjusted for depreciation. Depreciation was subtracted to arrive at this figure. That's why we add back. So one comment from the examiner is that a lot of candidates are not sure whether a particular figure should be added or subtracted. So let's get this clear. depreciation has reduced this figure. It was included in cost of sales or admin. And so because it's a non-cash item, we add back. Investment income, which are interest received or receivable, they have been added to arrive at this figure. We will subtract because they are a non-operating item. The same with interest expense. It has reduced that profit. We add back. So first we make adjustments and we reverse what was done about certain items. Commonly, loss or profit on disposal, depreciation expense, interest receivable, interest expense. For all these, do the opposite of what was done earlier. Then you will arrive at operating profit before working capital charges. Then from this, get your increase, decrease in inventory, payables, receivables. Understand that if inventory increased, we bought more, it should be a cash flow. If it reduced, we sold and received, it's a cash inflow, we add the figure. The same applies. If receivables have reduced, we received money from customers, it's a cash inflow. If they have increased, it is a cash outflow. Payables, if they have reduced, we paid our suppliers, we subtract. If they have increased, we are holding on that money, not paying them so that we can use it as a cheap source of finance. It becomes an inflow, we add. So after adjusting for inventory, receivables, and payables, you arrive at cash generated from operations. After this one, come and effect back the interest, income, and expense. Effect them back after you reversed. The reversal is for the sake of calculating a figure called cash generated from operations. So after we get that, the interest paid should now be subtracted, and any interest received goes under investing activities. Commonly, it appears under investing activities, but it is also okay to put it under the same operating. There are some items that have alternative places where they go. Then you calculate the tax paid, okay? At that point, you are at your net cash inflow or outflow from operating activities. The next heading is cash flows from investing activities. Think about purchase of non-current assets, PPE, proceeds from the sale of the same non-current assets, whether tangible or intangible. If there is any interest that was received and the dividends, received stuff, they are received from the investments we make. So they sit under investing activities. When we buy non-current assets, we are making an investment in our business. When we dispose of the proceeds, they are part of investing activities. Under financing, there are too many sources of finance for a business: share capital, loan capital. So that is why money you receive from selling shares comes here. Proceeds from, borrowings, they come here. Dividends paid to the shareholders, they come here. They are a financing activity. Then you get the net total under each heading. So the three headings: operating activities, investing activities, and financing activities, will give you a total. If it is positive, it's net increase in cash and cash equivalent. If it is negative, it's net decrease, okay? Meaning that whatever cash and cash equivalents you had at the beginning, it has increased or decreased by that amount. And that is all about this statement of cash flows, okay? Now, an excerpt from the examiner's report about the same cash flows. Candidates are not able to place items under correct headings. So you have no idea what should go to operating, investing, and financing, and we have just explained that. They are also not able to calculate depreciation when it is not provided. They are also fond of swapping brackets with no brackets. Please, any amount you think is a cash out, it should be in brackets. A cash inflow, it should be without brackets. And also, ascertaining profit or loss on disposal seems to be another issue experienced by the examining team. And also calculating the cash paid to acquire PPE seems to be challenging, okay? So I'll do a few workings. There's this question that came in the DA1 exam, March 2025. So this is the statement of financial position for 2023-22, okay? And the requirement is prepare Chabu statement of cash flows for the year ended using the indirect method. And the comment from the examiner says performance was very poor and 0 candidates at this particular city obtained half of the marks available, meaning no one reached a 10, no one out of all those that sat at this particular exam. So here are the additional notes. Profit before tax for the year this is your starting point. You start your statement of cash flows with the profit before tax, okay? So like here, I'm not putting the items in a strict sense, but under operating, your starting point is profit before tax, which is that same figure there, 7840. When you put your 7840, you are saying adjust for. So look out for depreciation expense, if it is available, profit or loss on disposal, profit or loss on disposal of PPE, then interest expense, okay? So when we go to the additional notes, during the year to this, some property which originally cost this had been sold for 240. So proceed, I'll do this working just here. Proceed 240. You need to compare proceed with the carrying amount. Accumulated depreciation on the date of disposal was 480. So when you subtract the 1080 minus the 480 there, you have 600. So carrying amount of this asset was 600, okay? So 600, the difference with the 240 there gives us a 360. So the proceed is less, the carrying amount is more, okay? So what it is that this is a loss on disposal. A loss on disposal it's sitting in here as a subtraction. It's a non-cash item. We need to actually add back. So this is one of the adjusting items. Loss on disposal, 360, to be added back to profit before tax. Then interest paid during the year, 560. Meaning the same amount was an expense, the same amount was what was actually paid. So we need to adjust this first. Interest, 560. Again, we are adding back because it reduced that profit. It's a non-operating expense. Depreciation for the year, the charge. So from the notes 1 to 5, you can see that there's no depreciation expense. In most questions, it will be part of the notes to say depreciation charge for the year was so much. Here, the only thing is that we have been given accumulated depreciation on the disposed of asset. only on the disposed of asset. Sorry, Andrew. Mr. Katumbu. I wanted to just find out whether there will be an allowance of some time. Okay, maybe he's not, let me continue in the meantime. So here, this depreciation was for the disposed of asset, not the depreciation expense for the year. Many times, this is where candidates have an issue. They don't understand accumulated depreciation account. When you check here, accumulated depreciation, brought forward, carried forward. Let me even do the account on this page. So this is accumulated depreciation. This is accumulated depreciation. I'm wondering how many extra minutes you are giving us.
We can add some 15 to 20 more.
Okay. All right. Noted. Thank you. Okay. So on this one, when you know this accumulated depreciation account, it contains these elements: brought forward, carried forward, depreciation of the disposed asset, and then the profit or loss figure, which is the depreciation expense. As far as this question is concerned, we have 1, we have 2, we have 3. And hence we needed to use this account to get that depreciation expense for the year by bringing, so always check the years. Check, sometimes the order is last year is this side, this year is this side, but sometimes the order is last year is this side, you know, the current year is that side. So always pay attention to the column headings, how the order of the years are put so that you don't make those unnecessary mistakes. So the 22 figure is a brought forward, 4480. This is a carried forward, 6360. And then the depreciation of the disposed of asset, that was a 480. So when you add and subtract these figures, it gives you this figure, which you are going to add back in your statement of cash flows. Another important working is cash paid to acquire PPE. Use a PPE at carrying amount account. When you say brought forward, it should be the carrying amount. This is 26,720. When you say carried forward, it should be the carrying amount 25,560. Then your depreciation expense, when you use carrying amounts, must be credited, which in this case is, so this was 6360 plus the 480 minus the 4480 there, 2360, 2360. So put your 2360 there. Then you should say disposal there, which should be taken out. The asset that was disposed of. Also use the carrying amount. So the carrying amount of what was disposed of here, 600. So the 600 should come here. In an event under equity, there was revaluation surplus and it has increased. The increase would have come on the debit. If it reduced, the decrease should have come on the credit. But in this question, no revaluation. And so just the missing figure between debit and credit here is your cash paid to acquire non-current assets, which should go under investing activities. So under investing, let me use the format here. Under investing, here, cash to acquire PPE, that's the working, proceeds from the sale. This one was calculated as 600 there, I think. Yeah, and those are the only items under investing. The two, cash paid and proceeds from the sale. Then under financing, ordinary share capital and share premium. What you do, get the total, the current year, subtract the total, the previous year. That is your proceeds. Proceeds from the issue of shares. So 7,920 there minus 7,280. Okay, this 7,920 minus 7,280. That is your proceeds from the issue of shares. The part that require increase, decrease in inventory, just get the movement. Increase, this is increase. The part require payables there. Also just get the increase in payables. Then the tax paid, you will always need to do a tax account. Tax account. These are liabilities, these balances for tax. Okay, these are the amounts for tax. So this being the current year, that's the carried down, 2040. The brought forward is there, 1720. Then put the profit or loss figure as provided in the notes. The missing figure, that's the tax paid. So the tax charge, 2480 there. Okay, should have been put here, 2480. Then the missing figure between debit and credit, that's your tax paid, your cash flow figure. That's the tax paid. Okay. I think let me end here on statement of cash flows. It's a very straightforward topic. Make sure that you can get around it. This one is a multiple choice question. We'll not look at it. I think the fact that we have had the other discussion already, let me just look at other issues. Looking at the time remaining, let me first of all go to the general issues that candidates are required to appreciate. If I will still remain with a bit of time in the 20 minutes, I'll come back to talk about a few issues in incomplete records. Okay, so this is the question, but let me first proceed and talk about issues. So it has been observed there's a generally poor performance on multiple choice questions. Very poor performance recorded every sitting. Some of the tips are that for multiple choice, can you make sure you understand the theory part of the syllabus, not only the number crunching, okay? And do not spend more than 3.6 minutes on each question. By doing so, you disadvantage yourself and you may not attempt the required number of the questions. In the 15 minutes reading time, can you make sure that you skim through and see which questions you are very comfortable with and rank them in the order in which you are going to attempt. Any that you think is complicated, you may leave it up to the end because you may waste 30 minutes on a 2 marks. That would be very, very unfortunate. As a candidate for this exam, endeavor to practice more. Many times, even me when I was a student, multiple choice question, you would ignore them and only concentrate on the full questions. That's not the right thing. Multiple choice are equally important. And over the years, a lot of candidates have performed so poorly. Balance up computational and theory part. You know, those regulatory framework, ISB, advisory council, do you understand them and their functions? The IFRS foundation, accounting concepts, characteristics, users of financial information, all those theories, do you understand them? Okay? People fail even the simplest multiple choice theory question. They fail. And let's do it differently as next month candidates. Let us go through our theory portion of the syllabus so that we can maximize on the easy marks that we get from section A, multiple choice part of the exam. One other thing about the same multiple choice questions, examiners, they test the candidates on the same principles. They will just change the scenarios. The same questioning, asking for profit or loss figure, statement of financial position, just changing the scenario. So the more you practice, the more proficient you will become. And you could be one of those getting 20 out of 20 on this particular one. When selecting answers, sometimes when there are theory parts of the multiple choice, use elimination method. Cancel out those answers you are saying, this one can't be the answer, so that you remain with a small number of the selection from which to choose your answer. Sometimes even guesswork pays. Do not leave any multiple choice question unanswered. Even where you are told it's 2 minutes remaining, just put A, C, B, D. You don't know where you just get a mark. Some candidates, they leave multiple choice questions unattempted. That is not a right thing to do, because you are not going to have marks subtracted just because you left out a multiple choice and that has been allocated a wrong answer. You will not have marks subtracted from you. You will not just end the mark. So just put, even guesswork helps in a crisis. I'm not encouraging that you just go there and do guessing. No, let's prepare. But in times where you have run out of time, the best is to do guessing than to leave the questions unattempted. General exam preparation. So first of all, there's poor answer presentation. When you get into that exam, you must make sure you communicate to the person who will mark your script effectively. Number your questions. You are not necessarily supposed to start with question 1. You can start with question 6, even start with question 5, as long as you number it to say this is the solution 5, followed by solution 6, followed by solution 4. Number them. Avoid spending too much time on a single question. So each 20-mark question, you are not supposed to spend more than 36 minutes. The moment you start a section B question, check your time. If it is 10 hours, write on top of the question to say 10:36 is stop and move on, whether finished or not. Don't spend 1 hour on one question. It means you are not comfortable with the question and you are disadvantaging yourself to earn easy marks from the other questions. That is why we encourage you strictly spend 36 minutes on a 20-mark and move on to another, whether completed or not. When you do this, you will make sure that all the required number of questions have been attempted. When you attempt all the questions, even where a lot of issues you were not sure with, the chances of you passing are quite high than when you have attempted only 4 out of the required 5. Your chances of failing the exam are very high. So go in there, endeavor to attempt the required number of questions. Please, Don't do this guessing to say, let me see whether when I attempt 4 or 3, I'll still pass the exam. Don't do that kind of experiment. You disadvantage yourself. Computational questions endeavor to show the workings. Don't just calculate on your calculator and then post only totals in the financial statements. Show the workings and signpost them to show the marker to say my cost of sales figure is sitting as working 4. My sales figure is sitting as working 1, and label those workings. The more workings you show, even outside or within the statement, the higher the chances of you getting the proportionate marks allocated to the entries in those workings. Avoid doing your adding and subtracting on the calculator without evidence being submitted. It disadvantages you too much. When it comes to the general preparation, ensure you study the entire syllabus. Do a careful selection of questions and label them in the order in which you think they are easier. Your easiest question must be labeled 1, your next easiest 2, so that you attempt them in that order. Where you think this question is going to be difficult for me, let it come last. Don't start with the most difficult question. It will take a lot of your time, thereby denying you the opportunity to earn the easy marks from your most affordable questions. Few weeks before the exam, embark on exam question practice under timed conditions. So like after this presentation, this evening or tomorrow, get a question paper, sit on your table with the fresh papers. Don't read the question and read the answer. Write your answer in full. See if you're able to do it within 36 minutes. Then that's when you check your answer and you can give yourself marks. Do the same for the next question. The same for the next question across the syllabus. Don't do because I'm comfortable with Sole Trader. Today you are doing Sole Trader, tomorrow Sole Trader, the other day Sole Trader, the other day Sole Trader. Already you have been challenged in the exam. Across the syllabus, go through the questions and review the answers and learn from your mistakes. The more past papers you go through, the more comfortable you become and the more efficient you will get by the time you get to the exam room. That's the formula. Don't go to the exam room having never attempted a single past exam question. That is extremely dangerous. Never, ever do that. Review the examiner's reports on the portal. They are there for all the years. Read about the common mistakes candidates make for these exams. For each subject, there's an examiner report. And learn from that report to say, I will not be the one to commit this mistake. Okay? Manage your time well. And the other things I've already alluded to. You manage your time well when you don't spend more than the 36 minutes, more than the 3.6 on a multiple choice. Move on the moment the 36 minutes has expired. That's time management. It's very important so that you have a chance to attempt all the questions in the exam. Okay? So there's a quote here by someone. The noblest pleasure is the joy of understanding. As you prepare for this exam, endeavor to understand what you study, what you read. Don't read like a newspaper, like you're reading a story where you don't care whether tomorrow you'll be remembering the story or not. There's joy in understanding what you read, and it will take you to the exam with a lot of confidence. That's a pleasure, noblest pleasure, to understand something and go to the exam room with that understanding. And our forefather, that most of us know very well, says education is the most powerful weapon which you can use to change the world. Do you want to be part of the people that are going to change the world to be a better place to live? Then make sure that you excel in your financial accounting exam and many other exams to come. That's the only weapon. If you lazy around now, then you'll be someone that is at the back of the train that is trying to change the world. Be in the forefront and do the right thing. In conclusion, I hope that this presentation will be of help to all of us that are about to sit for the CA 1.1 and DA examination. Okay? So in the event that I was given extra 20 minutes, unfortunately, we do not have enough time to go back to any of the questions that I said. If we have time, we may come back. I hope that in future, Mr. Katungu and the team can actually give us the whole day to talk about these issues, because it's important for these candidates. 2 hours, for me, it's like 10 minutes. We have even tried anyway to look at a good number of issues. So the authorities that are here, next time you should consider us for more time. At least if not a full day, give us even 4 hours. Then we'll talk about many, many more issues. Over to you, Mr. Katungu.
Thank you so much, Mrs. Kangwa, for your elaborate presentation. If we're in one open space and not the virtual one, I was going to ask the participants to give you a very big round of applause. Thank you so much.
Thank you.
Okay. Then to the student, you have heard for yourselves what you need to do in order for you to perform better in this paper. There are areas where you have been guided in terms of the correct approach to similar questions. So I urge you not to memorize the questions that were done here, but recall the concept that was used, for we do not repeat the same questions, okay? We examine the same principles over and over, and so you need to master the principle and not memorize the specific questions. So that's why when you are urged to one of the techniques I think that Mrs. Kangwa mentioned was that you need to time yourself, put yourself under exam conditions. If it's a whole paper, you give yourself 3 hours and do it like you're doing an exam. But please be cautious not to go solving that paper, memorizing, hoping it comes as it is. You need to master the concepts. A lot of things have been mentioned, ranging from the need for you to manage your time properly, to you numbering your questions correctly. You see, at times you fail to get what you deserve because of how you present your work. So make sure that as you are writing, your questions are always well labeled Don't give the examiners the task of trying to see what question a specific answer is for. And standard practice is that for every question, you start your solution on a new page. So meaning, for instance, if you are attempting question 2, make sure you write question 2A, B, C, D next to each other. The next question that you attempt, if it's question 3 or question 4, depending on the order you have decided to attempt your papers, as Mrs. Kangwa mentioned, make sure that this order entails you starting with the easiest. So if the next paper question is question 5, let it question 5 start on a new page of its own, not making them just continue even at times on the same page. Okay? Write what is eligible, avoid a lot of cancellations. At times, you are able to tell that the cancellation is too much. Ask for a new answer booklet. Okay? We always have more than sufficient answer booklets for you to use. But remember, if you are going to decide to spend most of your time doing cancellations in the exams because we have heard we have a lot of answer booklets, you won't have time to eventually submit something. So write properly, and then make sure you manage your time very well. Do not spend too much time on one question. In the 1.1, you are supposed to write 5 questions. Make sure you attempt all the 5. Even when you attempt all the 5, ensure that you answer all the parts of the questions. Okay? Avoid the situation where you have attempted 5 questions. In question 1, you have answered half. Question 2, you have just answered the A, which is 5. Then you skip to the next. Make sure as much as possible you attempt all the questions as per requirement. Okay? And in conclusion, wish to emphasize the fact that the meetings that we are organizing for you, that is the examinations answering techniques meetings, are not meant to substitute your attending tuitions. Okay? Just because we have placed videos on the website, we have Q&As on the website, there are textbooks that we sell to you, does not mean we are saying you should stop attending tuition. Your chances of performing better are higher when you are attending tuition than when you are studying on your own. Okay, you need guidance. We all need guidance. There are certain things that you do not understand on your own. When you attend tuition, you have a lecturer that you can approach and you seek clarity. But when it is just between you and the video, you and the textbook, you may miss out on a lot of things. So that's why we have a list of accredited tuition providers on our website. Make use of that. Identify the tuition provider that is offering tuition in a manner that you can manage. By manner, I mean there are some that are offering online lessons. There are some that will need you to be there physically. Choose what can work for you. But the bottom line is that do not overlook tuitions, attend tuitions. As we accredit our various tuition providers, we assess their manpower. We see who they have and what the qualifications those hold. So we do not just accredit anyhow. So in short, when a tuition center is accredited, we are telling you they have the manpower that can impart the knowledge that you need. So please make use of tuitions. And then there were questions around the presentation. Please note that we are going to share this presentation to every one of you. And for those of you that have many other papers, you are urged to make sure that you attend the other tuition, the other examination answering techniques that will be providing. So for tomorrow, we have management accounting. Those of you that are also registered to sit for management accounting can attend that. Then Friday, we'll have financial management. while on Monday we shall have auditing. Please make sure that you make time for these meetings so that you add onto your learning resources. Otherwise, thank you so much for making time for this meeting. Thank you and have a pleasant evening.